how to sleep soundly under the new tax regime. What individuals need to know. There's been a lot of noise around Nigeria's new tax regime. With the media attention, the noise has increased. But the fundamentals of individual taxation remain largely the same. This session we're about to discuss over the next 10 to 15 minutes is designed to separate facts from fear and explain what you as an individual need to do to remain compliant and worry-free. What's the objective of this session? Number one, we're going to explain what has and has not changed. Number two, we're going to address the common fears and misconceptions around this whole tax policy as it affects individuals. We're going to discuss what is your role, what is your obligation as an individual to the government. And finally, we're going to provide practical guidance on what you should do to sleep soundly. Now, I must put a context to this why it is important to plan, particularly at this time, really. There's a popular story of a farmer that hires a farmhand who says his only skill is to sleep when the wind is blowing. It's a very bad skill to have, to sleep when the wind is blowing or when the storm is raging. The farmer felt that was a wrong attribute or character. But anyway, the farmer hires him to observe him for a while. This farmhand does his duty well. At night before he goes to sleep, he puts the chicken, the animals, all that he needs to do, put it properly in the barn and covers them. Ensure that the farm is set. Peradventure anything happens. He does that every night. He was setting systems in place in such a way that whether there is a storm or not, things will be in place. So one day, there was a massive, massive wind. The farmer observes that there was a massive wind. He rushes out to the farm to check that things were well in place. He rushes out to check to quickly get things arranged as he normally does. To see that he puts the chicken properly, puts the goat properly, does everything properly, now that the rain is here. But behold, by the time he got to the farm, he saw that everything around the farm had been well placed. The animals were in their barn, the chickens were in the store, everything was well covered. And then he remembers what the farmhand, the hired farmman hand said, that I can sleep when the wind blows. He now understood what the farmhand meant. What does this story imply, particularly at this time? And number one, preparation is important. Number two, peace of mind. Your peace of mind is key. And that is why, for the sake of peace of mind, you have to prepare and do the right things to the best of your knowledge. And you must build a resilient system. Why? Because building a resilient system helps you when there are adverse or tough circumstances that you may have not planned for. This is a context of the current Tax Act. What is the existing requirements of the law right now, even in the current old tax law, that individuals are meant to do? For people who are employees, who you work for a company, nothing different really. One, as an employee, you are required to pay payee, which your employer is already doing for you. Number two, your employer is required to help you to file your tax returns latest by January of the following year. This is already being done for you, really, particularly if you are an employee and your company does well. So your annual returns is filed for you. Except if you have other earnings, income that you have that you now disclose to your company, and your company now adds it to your earnings and you pay the tax on it, which most people rarely do. But those things are already done for you. I'm talking about what the current system requires. The current system requires that freelancers, individuals, people who are not structured, who do not work for a particular company, who do things on their own, right? Who are freelancers or who are contractors, the law requires them to do a self-assessment of what they earned, meaning that at the end of every year, they say, oh, I earned this, add it up together. So you must have deducted your valid business expenses on those same jobs. And then the profit on it, the net of it, you apply the tax calculator on it, and you file your taxes to the government. It means that in the current tax process, you are required that you must have a PID through which you file your tax returns, meaning you must have a PID. So this noise about TIN. No, you already have a tax ID. If you in every state, individuals have what they call PID. You have it currently. And if you don't have one, you can create one. That process is there. So the noise about TIN is nothing but what you currently do. In some cases, some individuals, when they do jobs, contractors, people charge them withholding tax. The job withholding tax from their fees. When they deduct withholding tax from their fees, what do? They remit it on their behalf, and it comes in as a credit to them. That is currently ongoing. Nothing has changed. So it's important to note that for individuals that in entirety, all of the processes that we currently do today, nothing has changed. It's still the same thing. So what has changed? The process remains the same. But one thing you must know that is happening now is that there is now stronger coordination between agencies, not just agencies of government, but between the tax authorities and the banks now, based on the new law that is happening. It then means it becomes tougher for you to avoid paying tax, particularly freelancers, contractors, where all you can simply do is to just gather what you earn, deduct the business expenses, the profit out of it, you tax yourself, and you know how to disclose this wisely. Number two, data sharing between the banks and authority will increase. But again, I feel that implementing that is going to be very difficult. So there is no reason for people to fear. And there's increased public awareness now on tax matters, really. So basically what has changed. But let's look at certain facts, certain issues that people are raising around this new tax law. Let's look at it. First, you hear people say, without TIN, you cannot operate a bank account. TIN means tax identification number. And it's important I tell you that for you as an individual, when they say without TIN, you cannot operate a bank account, may I say to you that is not accurate. You can still operate your personal bank account. Your personal bank account is currently being linked to your TIN, to your NIN, I mean. Your NIN. So with that, you will have nothing to worry. The requirement for bank account to have TIN, tax identification number, is mainly for registered sole proprietorship businesses, limited liability companies, and NGOs, without which they cannot operate a bank account. If an account is strictly personal and not used for business transaction, completely your account is intact. Assets will not be blocked. That is a truth, it's a fact. For tax filing purpose, what an individual needs, for you as an individual, what you need is to have a PID. And that PID is important. You must have your PID. It is used for business, for yourself. When you want to file returns, when you do jobs, and somebody asks you what's your PID, you give them your PID so that any withholding tax deducted from your money is recorded against that PID. Any tax you pay at the end of the year is recorded against that PID. Number two fact that people are saying, they are saying their bank accounts will be directly taxed every time they receive or send money. Taxes will be removed. It's completely false. Tax are only charged on income and profits, not on your daily transfers or deposits. Maybe to allay your fears a bit, maybe in the coming year, maybe what you just be doing is that you be careful with your description when people give you money. Maybe, right? So keeping money in your bank account or moving money from one account to the other does not trigger tax. What triggers tax is when you earn salary as a person and you are supposed to pay PE, your business revenue. That is why we say to you, you must plan properly and not separate business from your personal expense, professional fees. All of these are what is subject to tax and not movement of what? And not movement of funds. The people that are likely to be affected, where maybe a lien will be placed on the account, because they don't pay taxes, are corporate entities that maybe they owe tax for a long time and they have refused to pay the government. The government can get an injunction to ensure that a lien is placed on the account and they will not be able to use the account again. But this is in extreme cases, really. There's also the noise that you're going to pay more tax under this new tax regime. That not everybody will pay more. What's the fact about this? Know this. In the new tax law, individuals, people who work in companies, or people who are freelancers, who in the whole of a particular year, that all they earned is 800,000 annually. Those people are completely exempted from paying taxes. Individuals earning above 800,000, but less than 200,000, 2 million, 20 million, I mean, individuals that are earning between 800,000 annually and 20 million annually, according to what we have checked in our own firm here, they will pay lower taxes under the new tax regime than in the current. So if you are earning 20 million and below, you're going to pay lower taxes, really. Only those who earn 20 million and above will pay more under this new tax regime that is coming up next year. So watch out for this on a general note. So generally, under the new tax law, the overall amount exempted from tax is the total of 800,000 plus any pension you pay from your salary and the rent you pay to your landlord. Any rent you pay to your landlord, but limited only to 20% of the rent you pay. And unfortunately, you cannot earn, the relief you are getting for that rent, it cannot be more than 500,000. So the peak the government has given is 500,000. So it means that even for you as an individual, just note this, that the following is exempted from what? From tax. Your first 800,000. So if you earn 2 million, 800,000 of that amount is exempted from tax already. The only money that is left to be taxed is 1.2 million. But if inside the 1.2 million, yes, pension is taken again, pension contribution is taken again, or rent you paid, the rent you paid for the year, that rent you paid, 20% of it, in as much as 20% of the rent you paid in total is not more than 500,000, then you are free. We'll take all of this as benefits, as relief, before tax is now charged. So what must employees do? If you're an employer, somebody who works with a company, what must you do? You must ensure that, one, your pay is deducted effectively going forward and remitted. Ensure that your annual returns are filed. If there are additional income and you think is major, not passive income. If it's passive income, you don't need to bother, in my opinion. But if there are major income, you can disclose it in addition when they are filing your annual returns. By now, you must maintain a very consistent PID. Your PID you're using right now must be consistent. This applies to whether you are working for a company or you are doing your own thing and you're running your own individual thing. Again, like I mentioned earlier, for the sake of any peer, if you have any banking transaction, ensure that there is proper, narration. For freelancers and contractors, people who are not working for, structured businesses who do their own thing, one thing I must say to you, you must be ready to file your annual returns. And may I tell you, when you're, particularly in Lagos, for instance, when you're filing your annual returns, at some point you get a tax card. It shows the history of your tax, of the history of your tax life. So what do you do annually? You know that, throughout the year I earn only 3 million. Of that 3 million, what are the business related expenses? You remove your business related expense, maybe the total is now 1.8 million that you have made. You file it for tax purpose. Don't forget, you're going to get some relief. You're not going to be taxed on the whole. Remember, I've told you earlier, you will get some relief. Your first 800,000 is free from any tax. And if you paid any pension, rarely do you pay pension anyway for freelancers, Any other deduction, that legal deduction, maybe pension or any rent you pay, 20% of the rent you pay will be free from what? From taxes. And you have only a little to pay. So what you should do is be ready to file your annual return. Go to your nearest tax station and file, or you can even do it online. There are tax calculators online. Go and check and put in, this is your net income. Put it, what tax should I pay? What do? Deduct project-related expenses. Expenses that you incurred that relate to how you earn that revenue, deduct it. When you as an individual, when you are signing any contract with any company or on their contract, you must tell them this is your PID. So if they deduct any withholding tax, it will go against your name. You can keep it in record. Keep accurate income records. Very, very important. And I'm saying this because for those of you who are individuals who they deduct withholding tax, you must know that deducting withholding tax from you is more like you are paying your payee ahead. So if, for instance, at the end of the year, when you look at your returns and there's taxes to be paid, what do? You must ensure that you use the tax deducted from you, withholding tax deducted from you, to clear your what? Your payee that you are meant to pay. That is why in this my next slide, I talk about why withholding tax matters. Collect your withholding tax to reduce your future tax liability. If you know that there is a particular company that deducted withholding tax from your money, the money they were supposed to pay, they were supposed to pay 1 million, they paid you 950. That 50,000 they will withheld is like they have paid your payee ahead. So assuming it is only 1 million you made throughout the year, but then you want to file your taxes, and they calculate that, the tax you're supposed to pay is just 200,000. You're supposed to pay tax on only 200,000. By then they calculate it, and they find out that, you're supposed to pay 60,000. You will not pay 60,000. You will pay 10,000 because they've deducted 50,000 from you earlier. So what you need to do every time is that you look at all your income. Which of the income did they deduct withholding tax? How much would the withholding tax be deducted? Go and check your tax file, your tax history online. Go and check at the credit there. To the end of the year, when you're supposed to pay your total tax, the first thing you must deduct is all the withholding that have been deducted from you. You must ensure that it is deducted before you pay your final pay. Now the issue is if somebody deducts withholding tax from you, but you don't follow up to ensure that that withholding tax was paid and you can see it, then there will be a problem. You will not be able to work. You will not be able to use it. Conclusively, if you must sleep soundly, compliance brings accurate record, provide clarity. Awareness removes fear. And that is why we are here for you. So there's no reason why you should be bothered. You can sleep even in this new tax regime.